Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hey everyone, good morning.
Good morning, real estate investors across Canada. Welcome to the Real Estate Investing Morning Show. We are so happy to be here. On today's episode, what we're going to be diving into is we're going to be talking all about how seemingly average Canadians, average folks, the shit suckers of the world, average people across Canada just seem to be, are quietly building massive real estate wealth. And why is that? How are they managing to do this? Why are these people able to do it and so many others aren't? And we're going to talk about the clues that most people leave behind, the successful little things that people do that are contributing to them and helping them build millions of dollars in real estate wealth, throughout their lives. So I'm very excited for today's topic. Yeah. I think it's gonna open up a lot of people's minds on what's possible.
100%. Wayne, I was gonna say that I feel like most people who see others investing in real estate assume that they must have some massive leg up, that there's some big inheritance, or they have this super high paying job, and that must be the only way that they could have accomplished what they've accomplished. And so I love that we're doing this, because I feel like this is an episode that we can literally share with the world. Hello everybody.
Yeah.
This is something that you all can do.
Yeah. And I'm bringing it back. So for some of our loyal listeners, I made the shit suckers, reference, and someone who's listened to this episode for the first time is like, whoa, it's okay. This guy's a little bit too much. You have to listen to yesterday's episode. We broadcast the show live every weekday morning, but I really want to pull it back and just really bring it back for the new investors today, because there are so many people that are new to our show that have just found us and they love the information, but it might be a little too advanced. It might be a little too over the top, and complicated for you. So I really just want to bring it back to the basics of this and really just focus on, how it is that you, an average everyday person, can do this. And you don't need to be some full-time real estate investor. You don't need to be an entrepreneur. You don't need to have a business background. You don't need to have an investments background. Anybody can do this. Mm-hmm. And we have been helping hundreds personally, thousands across Canada through our courses and through our podcast. We've helped thousands of people buy their first property and then continue to buy more rental properties and build wealth. And we're so incredibly proud of that. And we want more new investors to feel comfortable with it. I don't want to. I love the advanced conversations that we have every day on the show, Gabby.
Yeah, of course.
But at the same time, we do need to keep in mind that there are a lot of newer people here that just okay, wait a second, slow the hell down.
Yeah.
What was that first thing you said? Right.
Yeah.
And so, that's what we're going to be talking about today. We're going to be helping you guys out with that. Now, I did mention that we're broadcasting this in Canada, and we're from Edmonton, Alberta. Not from here, but we've been here almost half our lives now.
Yeah, neither of us are from here.
And that's where most of our investments are in Alberta. But we're broadcasting the show live on YouTube across Canada right now. What's the weather looking like across Canada today? What can people expect?
The weather today will be 16 degrees in Edmonton, 15 degrees in Vancouver, 12 degrees in Toronto, and 14 degrees in Halifax.
Thank you so much, Everly.
Thanks, Evie.
As you can tell, this is a family business. Our daughter, Everly, has been a part of this journey with us ever since the beginning, ever since she, her first word, I believe, was...
sunny.
What?
No? Oh, it's sunny.
That's what her first word was? Oh, I see. It's a weather joke. No.
Yeah.
No, I thought it was, bitch, where's my money?
Oh. Okay. I see where you were going.
Rent.
I have a super itchy nose right now. Sorry.
Do you?
Yeah.
Are you going to sneeze?
No, I'm not going to sneeze. It's just very itchy. So I'm like,
Okay, that's all right. Yeah, I will do good at that. Sorry, do you need me to scratch your nose?
No.
Okay.
You could maybe black out the screen for half a second or something. Or you could just let me, over here.
Yeah, sure. One sec.
1, 2, 3, go.
There you go. This is a live show, so if
got an
Gabby
itch, you
needs to,
gotta
if
scratch
Gabby
it.
has to pick her nose, I have to pull her off screen. It would
I
have been
didn't have to pick it. I had to
hilarious.
scratch it.
It would have been, yeah, sure. It would have been hilarious had I turned the camera back on with her finger just right up there, just digging away. Yeah. No, this is a live show, guys. We do this show live on YouTube every weekday morning at 7 a.m. Mountain Time. I just noticed something very interesting this morning that I woke up we woke up to 997 subscribers.
Oh.
So I want to
So
know
close.
who's going to be the 1,000th subscriber.
Do they get a prize?
I can't keep giving away prizes, Gabby.
People are
Jesus.
just going to unsubscribe and subscribe and unsubscribe and subscribe. Trying to get that one spot, yeah.
I tell you what, if you're the 1,000th subscriber, I want you to send me a screenshot, okay? Send me a screenshot. You can DM me, on any of my socials, or you can email us at info@reimorningshow.com. Send me a screenshot of you becoming the 1,000th subscriber, and I'll make it up to you. I don't know what it's going to be yet, but
Okay.
I'll find some way to make it up to you.
It'll be a surprise.
We appreciate it. We appreciate all of our followers. We appreciate everyone, making the transition to YouTube a couple weeks ago. I know that was a big thing. Well, it probably wasn't a big thing, but since going full on to video, we've done this podcast over 1,100 episodes now, and now going to video, we're so happy that all of our loyal morning squad has been continuing to join us every morning and made that trip and made that transition, and everybody else who's joined us since, Nori joining us every morning now and being a part of the what are we calling our morning squad?
The PP posse.
Why did we call it that again?
The Property Poppy posse. I forget who came up with it.
That makes a little bit more sense when people understand. You got to remember there's new people listening and they're like, okay, I don't think I'm going to be joining the PP posse first thing in the morning.
I thought of one. I thought of something that our morning show listeners could call each other.
Yeah.
I never revealed it. Do you want me to reveal it?
Is it better than PP posse?
Yeah.
No?
Yeah.
No?
Yeah. I think it's better.
All right. What do you got?
Okay. So we have the Canadian Real Estate Investing Morning Show.
Oh, God. Oh, God.
Which is like creams.
Yeah.
Or like the creamers.
They're the creamers, aren't they?
Yeah. I don't know. I thought it was good. Let us know your thoughts.
Oh, yeah. The cream always rises to the top.
Putting that cream in your coffee.
Oh, my God, Gabby.
Or the PP posse, whatever. You guys
That's the
decide.
options. That's the options that they got. Okay. All right. Well, you guys vote. Maybe the 1,000th subscriber gets to vote. What
Gets
do we
to
call
pick?
it? He gets to pick. Yeah. So it is 7:00 today. Is what, Thursday?
Yeah, Thursday.
Tomorrow on Friday we have a special guest on our show.
Ooh,
Our
first live guest.
Our first live guest on
That's
the video
exciting.
podcast.
That's
Yes,
exciting.
we're still working out the kinks. Let's see if it actually works. We
Tomorrow's
might have to
going to
have
be stressful.
we might have to have a backup topic for tomorrow just in case it doesn't work.
Okay.
This is a pretty big operation here that we're doing every morning here. Yes, investor focused realtor out of Edmonton, Calvin Hexter, is going to be joining us on the show. And I'm still working on my audio sound effects. I used to have sound effects, and I don't have them anymore. So you're just supposed to go. Pew, 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 pew.
Oh, sorry. Pew, 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 pew.
Yeah. Very excited for that. We're going to be getting an Edmonton real estate market update. Speaking of Edmonton, I was speaking last night at the Edmonton Real Estate Investors Association.
Yes.
Did a fireside chat last night.
Yes.
How was it?
Don't do that. Don't do that. I didn't end up going. Okay. I heard it was fantastic, though.
From
I
who?
heard it was
From who?
absolutely fantastic. I will not reveal my sources.
From who? How do you know? How do you know I just didn't absolutely bomb? And
I guess I don't know for sure. You guys, was anybody there?
did you seriously think for a second that I
you could have
bombed?
potentially
That
bombed it? No.
that it is that Wayne could bomb.
To this day, hasn't happened.
To this day has not happened. I've never been wrong about anything in real estate investing. I know my shit, and it was a great presentation that you missed. But thank you for your support.
You're welcome.
So let's talk about you and your wives and husbands. Do they support you when you go and do a presentation?
I also have a question for you guys.
I told her last night before bed. I said, I am not letting this go. I am going to bust your balls so hard about the fact that you said you were going to come and support me, and then you didn't in the 11th hour.
Okay.
And I said, I'm not going to let it go. I am seriously. And then, so I didn't say anything about it. I just waited till the live podcast just to do it in front of everybody.
Yeah. I just have a question for you guys. Do your husbands or wives, if they have something important coming up that they want to make sure, their family is in attendance for, do they put it in the calendar? Is that something that they do? Do they put it in the calendar when they want to make sure that their family can support them? Or do they just not put it in the calendar and not see that there's an appointment there for their wives?
Touche, Gabby. Touche.
I found out yesterday morning looking at the calendar. I was like, wait a second. I have an appointment tonight. I can't go to your thing.
Oh, God. Yeah. No, it was fantastic, though.
It
was fantastic.
I'm happy to hear. I have no doubts as well. I absolutely never doubt that you're going to spit fire. And you looked really good. Walking out of the house, I was like, damn. Don't pick up any tricks when you're out.
Almost canceled your appointment.
Almost.
Almost canceled your appointment. Yeah, it went really good. We talked all about the Edmonton real estate market and the history of it, what's going on right now, and also what the future holds for the Edmonton real estate market. And I didn't hold anything back. It was a full deep dive diagnosis of what's going on and the opportunities that are currently available and the opportunities that are coming. And it's I thoroughly enjoyed watching the light bulbs go, but more importantly, the jaws on the ground.
Were they dropping?
They were dropping. It was quite the reaction. So
that's awesome. I love that.
Yeah, no, I'm really happy about that. I haven't gotten. I think I got about 5 or 6 people that reached out to me last night. I haven't read their messages yet. I saw some DMs come through this morning, but looking forward to reading those messages. Looking forward to get feedback. If you guys were there, what do you think? What did you enjoy? Is Leanne and Kyle here? I saw that they were there.
I haven't seen them this morning.
Kane is probably sleeping. Kane came all the way from Grand Prairie. He finished the night shift, drove all the way to Edmonton, and had not slept.
Oh my God.
So
wow.
Shout out to Kane for
wow.
You look like absolute shit. No, for a guy that had been up for however long, I was actually quite impressed. I'm like, wow, I wish I were young.
I was going to say, he's young.
I wish I could do that. My
sleep.
God, I'm like, I wouldn't have known, man. You look great. Chung came all the way from Calgary.
Amazing.
Chung came all the way from Calgary. Got to meet Chung for the first time in person. That was fantastic.
Love it.
I can't imagine Chung's in the live show today because I believe he was going out for dinner afterwards and going to get slammered downtown Edmonton.
Okay. Good for you.
He was looking for some recommendations for some restaurants, but where would you send someone downtown Edmonton?
Like for a good time or for a good dinner?
I'd say dinner.
Like the Workshop or what's that one right off of I can't remember restaurant names. That's the problem.
I always have trouble with downtown.
But do you remember we went there with Barry and Donna McGuire and they brought out all these small plates of not like appetizers, but just small plates. So we got to eat a whole bunch.
The tapas?
Yeah.
Oh, no, I don't remember what it's called. I know which one you're talking about, but we've been to a bunch of those, so it's tough. But yeah, anyways, thanks. Thanks for that.
Can't remember quotes, can't remember actors' names, can't remember songs, can't remember restaurants.
Yeah,
I have a crap memory.
You're going to get replaced by Claudette. You know that, right? When Claudette finally comes out.
Does that mean I can just chill and live life? Come on, Claudette.
There are AI podcasts out there. I mean, it's already happening, right? It's I did quite a bit of research into it back when I was still doing research about just switching things over to YouTube, I just kind of stumbled upon a lot of new articles and things that were being written about the fact that there's actually a lot of value in the podcast world and in YouTube world for people that are actually real organic beings. And most of the stuff that was out there was saying that, you could start a podcast and be successful and you don't even need to show your own face. And the AI world is completely taking over the information and education on YouTube, where most people will just, sit here, take a picture, and then suddenly, AI will have your face move, AI will write your script, AI will read it all and everything else. And yeah, it's quite interesting the way that the world is changing, and then it went on to say, but anyone who's willing to actually do the work, there's a lot of value in that, because people actually appreciate real organic people, a real boy and a real girl every morning. And I think that the reason why I love it so much and why I go out of my way to, I know sometimes like the whole like shit sucker comments and stuff like that, is like a lot of people will be like, did you really need to say that, Wayne? It was a little over the top. It made me feel uncomfortable. The reason why I'm doing that is I'm trying to get a rise out of you. I'm trying to actually just show that this is not an AI powered script based episode. This is two real people, two real estate investors who are out here, who started in the exact same position as you, who are now in this position, to a point where they could be full-time business owners and real estate investors, to have built what we built. I want to show you that we are just normal, real people having real conversations every morning at 6 or 7 o'clock in the morning, and that you can do it too. And so I do that to kind of snap you out of it, to create a bit of a realism to it, to connect and resonate with you. And so that you can see that just normal people, average people just like you, have done this, and you can do this too, right? I could sit here and talk all boring and talk numbers and talk stats and things like that. I could read off a script. I can put a teleprompter above me and I could literally just read it. And then Gabby could be like, yes, absolutely, Wayne. I couldn't agree with you more. That's actually one of the most positive things about real estate investing, is that, if you buy it with cash flow, there's almost next to no risk. You guys would get bored. You turn it off within minutes. I think people actually stick around for the shit sucker comments and for the shenanigans and the bickering between wife and husband on the show. I hope that is actually what, and I know this because I've talked to a lot of our listeners, I've talked to a lot of our followers. I know my demo. That is what people appreciate. They appreciate the realism of it. And there's enough bullshitters out there in this industry, bullshitting their way through it, reading off a script, perfectly editing their videos, and then pumping out hundreds of thousands of dollars in Facebook and Instagram ads in order to get you locked into their free webinar and to their program and everything else. There's enough of that out there. There is very little real, true, authentic individuals who are actually doing it with actual results in this industry. So yep. I will still continue to show up and I will be myself. Most of these jokes are the same jokes that I would make at 9 a.m. or at 9 p.m. with my wife. You get us. And if you don't like us, then that is okay. Yeah. You can unsubscribe and we can have 996 subscribers. Yeah. But if you dig it, if you love it, if it resonates with you, if you're part of my demo and you want to be a part of the PP squad or the creamers or whatever shitty name Gabby comes up with for this morning show posse. If that's you, then subscribe, stick around and be a part of it. I want each and every one of you guys. I want everything for each of you guys. I want all of it. Yeah. Whatever it is that you're here for, whatever it is that you want, you're here for a better life, and I fucking dig that. Yeah. I love people who are willing to go against the grain, against the norms of society, to build something better for themselves, to take life by the horns or by the hair and just go for it. Yeah. You know what I mean?
In the comments, Josh says, real recognizes real. And yeah, I couldn't agree more. I'm all about authenticity, and that's exactly what Wayne just said. But in other words, is that like we are here to show up authentically and to share with you authentically what it is that, or how it is that we think is the safest and best way to be investing in real estate. And with that comes, some shenanigans and some other things. But if you are sticking around and if you're paying attention and if you're listening to the messages in each and every one of these episodes, you will really get to know who we are, what we stand for, what we believe in, what we put up with, what's bullshit, and everything that is us. And if that's for you, then we are so fucking happy that you're here. And if it's not for you, then please step aside and go do whatever it is that you want to do and leave us with our people.
Yep.
Leave us with our happy little family where we can teach the people who want to be taught what we have to give, and we'll all, find our own successes. Right?
Yep. Absolutely. Life is too short.
Yeah.
Life is too short to be convincing people.
Yeah.
And again, that's all about being authentic. That's true authenticity, is that I'm not going to sit here and I'm not going to try and to cater to individuals who are uncomfortable with who we are. We're going to be ourselves, and I'm not going to bend or be a different person to, there are things that I can do less of that are not necessarily, as important, but for the most part, I'm not going out of my way to offend anyone. I'm just going to be myself, and I'm going to do it in a certain way. And we have a very unique and safe way of investing that we do, and so that is that we can carefully and safely put our funds and the money that we bring in from investors. We can safely put these into investments. We can set up our systems and just put it on autopilot.
Yeah.
We want to know that whatever we put it in is going to be safe, it's going to be reliable, and that the systems that we have created, tried and true, that we apply, are going to do their work to reduce the risks to the bare minimum, so that we can reduce the amount of responsibility and day-to-day actions for this business to the bare minimum, so we can just have safe, reliable investments doing their thing passively, and we can focus on the things that are most important to us, like our relationship, like our families, and anything else that is important to you, right? I'm talking about average people doing average things. You got a baseball team. You got a hockey team. You've got a family. You got a dog that you love walking in the river valley. I don't want to impede on that, right? So how can we build out this real estate wealth? How can we grow your wealth with the least amount of work, in the safest way, getting the best possible returns that does not impede on your lifestyle, right? And there are so many average people that are doing this every day. And a lot of them you might not even recognize. You would walk past them in a grocery store or a mall.
Have no idea.
You would have no idea the amount of wealth that they're building silently, passively, just regular everyday. If you walk past me in the mall, you probably wouldn't recognize any of it. You wouldn't. I mean, obviously, I've got a face, and there's content, and there's marketing and stuff, and I can't go into a mall without being recognized anymore. So that's an unfortunate thing. Sweatpants are completely out of my my wardrobe now. But if you saw any real estate investor or myself, you would not see greatness. You would not see that, because, and that's the point that we're trying to make, is that just most real estate investors who have built wealth in real estate, who have done really well for themselves, building millions of dollars, you would not recognize it. You would not see it on their face. You wouldn't see it, in them through the way that they talk. These are just simple things that people can do. So anyways, there are some clues though. There are some clues. There are some tips and things for how average people are quietly doing this, and what they're doing that you're not doing, that you could be doing right now, that could change things. And we're going to start talking about that once we come back from this short little break. We'll be right back.
You are a professional real estate investor. You are not a professional boxer. And you are definitely not a professional bookkeeper. Enter Fingo. Fingo is a professional bookkeeping service by and for professional real estate investors. Your life just got a whole lot easier, and your profits are ready to soar. Leave the bookkeeping to Fingo so you can focus on what's most important, finding the next deal and raising money for it. Schedule your free consultation at fingo.com.
And we are back. I just reading the comments here on YouTube for those that are joining us on the live show. What do we got going on here? Okay. Someone, Kirsten thinks that it's Bodega. Perhaps it was Bodega downtown.
I do love Bodega, but that wasn't the one I was thinking.
Downtown Edmonton. Great tapas, great wine. Gabby and I don't drink wine anymore, which is an absolute sin.
It kind of made the bodega experience.
That did. There was nothing I love more than buying extremely expensive wine and just eating just
really good food.
Courses after courses after courses of really good food.
Yeah.
But now that we haven't touched alcohol in years, well, it kind of ruins that experience. Yeah. So, but anyways, if you love expensive bottles of wine and eating really, really good food, I recommend Bodega. Bodega. Hit us up if you want to sponsor the show. It's not exactly the best.
P.S. I love the Highlands one the best. It's the best vibe.
Yeah.
Best vibe.
Josh had said earlier, real recognizes real. What else was there? I saw that your vibe attracts your tribe, and I love your tribe.
Our tribe. He says, I love our tribe. Sorry. And indeed it is our tribe.
Oh, my glasses on. What else we got here? There will be signs. There will be signs of success. That's how Kirsten said as well. So let's get into it. What are some of these? What are some of these signs? What are some of these breadcrumbs that successful, real estate investors leave behind?
Yeah, I think most importantly, most importantly, the first thing you got to do is I think that these people are starting early, right? Starting earlier than most, at least.
Yes. It definitely helps. And if you're 44 and it's not too late.
Yeah.
It's not too late. All right. I will say that. But if you're 24, it is certainly easier and it will give you a dramatic head start over everybody else in the race.
Yeah. And what I like is that I think we're seeing more and more, we're seeing kids. It feels weird.
Whoa.
It feels weird to say that, but we're seeing kids in their teenage years become interested in doing this life differently than, previous generations. And so we're actually seeing 16-year-olds, 17-year-olds, 18 and 19-year-olds who are saying, okay, I'm about to graduate or I just graduated, real estate investing. How do I do this? How do I get into this? What do I got to do? And it's like, whoa, this is cool. I like this.
Last night at the Edmonton Real Estate Investors Association meetup there was an individual came up to me and said, thank you. And he really, really loved the presentation. He said that he's been bringing out his 16-year-old daughter because he wants to expose her to stuff, getting her to help out and volunteer and things. So he said it was really great that she was able to come and see you speak.
Oh, I love that.
So that I thought that was really cool. I thought that was fantastic that, someone would bring their daughter to something like that. I don't think I swore last night. I think I did a full presentation without an F-bomb, which
wow.
That's a rarity. But, I think that we do get a lot of younger want to be investors in their late teens. I try and remain as hip as possible and relatable. But I think that the reason why we attract so many younger people, one, is because I think that we're the youngest as far as in this industry. There's a lot of old people doing their old people things. But I think that what we try and do is and what we do very well is we keep things very simple We simplify the whole process,
Yeah.
which I think resonates with younger people, and the simplicity of, okay, so this is all that I need to do, right?
Yeah.
As opposed to overcomplicating things. We do overcomplicate things with more of our advanced strategies, but I think that resonates with younger people a lot. And starting early is a fantastic strategy.
Yeah.
Because if you can get started earlier, your money in real estate is made in the long term. So the earlier you start, the more of a head start you have, the more time you have to build wealth and allow that wealth to compound over time.
Yeah.
Right? It's not a straight line. It's actually, as you grow, you can actually leverage a lot of your profits and the wealth that you've created, the equity you've created, and pull that out and then redistribute it or reallocate it into different investments, which will allow you to multiply or compound that success. So the sooner you start building that wealth, the sooner you can start leveraging that to allow that compound effect to happen.
Yeah, absolutely. I think that, like we've had so many students at this young age come through the program, and
Past and present.
And with what they've built at an early age, they're going to be absolutely set for life. And I just think that is so cool, to start at such a young age and do really, a few years of work and be set up.
Yeah.
Right.
That's so. I'll pull back the curtain on our coaching program a little bit here. When I coach younger individuals, the way that I coach them is completely different than the way I would coach a 20-year-old, a 30-year-old, or a 40-year-old, or a 50-year-old. Everybody's a little bit different. But I have a very unique way of coaching younger individuals, because for them, my goal is to get them to work as hard as possible in a short amount of time and just be done with it. And I almost look at it like, if I were this age, all of the wisdom and experience that I have, what would I do with that time and that energy? And there's a certain level of energy and momentum at that age, because there is and younger individuals, they don't see it. And I remember I didn't see it, but at that time, you really don't have a whole heck of a lot of responsibilities. You might feel like you're busy. You might feel like you got a lot of things going on, but as you grow up, you'll realize, as you start building your life, you'll realize there's a lot more responsibilities that, there's just things you can't get around. But at an early age, when you're still living at home, or maybe you're renting out a house with some friends and things like that, your responsibilities at an earlier age is significantly less.
Your expenses are low. Maybe you have a girlfriend or a boyfriend, but you're probably not married. You probably don't have kids. Maybe you have a pet, but probably not. It's like you haven't accumulated all of life's big moments quite yet. And baggage, yes.
Right. And also you haven't been punched in the face too many times. So like, you're just full of optimism.
Yes.
and that energy is just going to be, it's like that Care Bear beam. You know what I mean? We just want to let it go. You know what I mean?
Yeah.
So I really like utilizing that young energy and just putting it right towards the task in front of them. And just like, we don't need to overcomplicate this. Let's just go fucking hard. Let's get this done. Let's set it. Let's forget it. And then you can go and fucking live your life in your 20s. Yeah. Oh my God.
Yeah.
Can you imagine just having it all set up like we do right now and being 10 or 15 years younger?
Yeah.
You know what I mean? We started when we were relatively young.
Yeah,
we started
we
when we were in our 20s.
In our 20s, yeah.
But like, had we done it 5, 6, 7 years earlier,
yeah.
Could we have done all of this before we had a kid? Oh my God, we would just be. Can you just imagine hand holding through? It's okay.
Are you okay?
Can you just? I'm trying to think of a country. Can you just imagine just hand holding through Paris? You know what I mean? Just doing that. Like, can you just imagine like sleeping in and rolling over? And just like eating croissants, and it's just, you know what I mean, and just like let's go to Italy and let's get a gelato. You know what I mean? Like, oh my God,
Yeah. So
can you just? No, I'm not done. Can you just imagine like just like skipping through Kyoto? Like, fuck, wouldn't that be awesome?
Mm-hmm.
You know what I mean?
Yeah.
How many?
Sure.
There's so many parents here live with us this morning. Like, fuck, I killed a skip in Kyoto. Oh my God.
I do.
I'm not done.
No, I do want to read a comment because we have Rita here listening live, and she says we're starting at 44 years old.
Oh,
but
sorry.
But we're excited that we started. Yes, better if we were 24 years old, but better sooner than later. Our family with you guys has made it possible for us to do it right. And I love that, Rita. I love that you put that in the comments, and I love that you're showing that you don't have to be, 18 or 19 years old to, to do it right. You can start anytime. And we did say that earlier. But Rita and Darby, they're students of ours. Yes, they're starting at 44, but holy man, like just we're like, okay, we got to do this, and then took massive action. So they got the mentorship, they got the education, and they are doing everything to set themselves up at the point where they are for a better future still. And yeah, I think they're a shining example of that. You don't need to be 20 years old. You can be 40, you can be 50, and still do something in this real estate investing world.
Yeah, absolutely. Yeah. Absolutely. And what you're doing right now is you're showing your children what's possible. And I hope that, by sharing this experience with them, or even just maybe not even sharing, but just showing them, just being a good role model for your kids, hopefully they see that, hey, maybe I could do this too. I mean, I see mom and dad doing this. They're not really doing all that much. You know what I mean? It looks pretty simple. Maybe they can go and buy their first one when they're 18 or 19 years old, or maybe sooner. Maybe you can help them. Maybe you can help them buy that first property, give them that first down payment, and allow them to do that, and help them get started at an early age so that they can go, tiptoe in Kyoto.
Through the tulips.
Ooh, that's going to be a new tiptoe in Kyoto. It's a new sweater. Maybe they can do that. You know what I mean? And they can enjoy life in their young, energetic 20s. You know what I mean? Before life finds a way to speed bag them in the junk.
Okay.
You know what I mean? Like, that's what happens. You get into your 20s, and then suddenly it's like, you know what I mean? Like, it's goddamn, go easy on me. Life just has a way of just sneaking up on you and speed bagging you. But hopefully, you're a good role model for your kids to be able to show them that. And I think of Dennis and Andrea in our mentorship program, in the REI Masters mentorship program. And I remember when Dennis joined, he said, okay if my son is really interested in this stuff? And I haven't seen his son or his kids so much, but personally, but
we met him at an event. So
we did meet him at an event. Yeah, absolutely. But I hope that they're watching and he's like, can you watch the courses and things like that in the program? Like, yeah, absolutely. Go for it. I love that.
Yes,
I think that's fantastic.
Please.
I hope that our daughter, she's turning 11
next
week. I hope that she's still interested in this type of stuff, or at the very least, she understands it and she applies it when she, becomes old enough to be able to get a mortgage. Because I think it's just a huge opportunity. So, hey, maybe you didn't start early, but what you do right now, people are watching. Your kids are watching, your nieces and nephews are watching, the people around you are watching, and you are a role model to someone. And hopefully you can inspire them to get started earlier, because I'm telling you right now, starting earlier gives you a whole lot more opportunity for building wealth, and that wealth will compound over time. Now, if you didn't get the benefit of starting 20 years earlier, that's fine. But hopefully the next generation gets the benefit of being able to start 20 years earlier. It's all about when you start. You know what I mean? And if it will compound. Your wealth may not compound during your living years, but it might compound in your next generation, and the next generation and the next generation. So some other things that successful average people, everyday people are using, and that they're realizing is that in order to do this properly, you need to do it with cash flow. Okay. And this is pretty much 101 real estate investing, but I'm still shocked and surprised to see how many people invest in real estate without cash flow. Yeah. What I'm not shocked and surprised to see is how many of them do not succeed.
Right. I think that most investors, and I'm completely fine saying that, I think most investors are investing with emotion and what they think is cool and what they think they should own or what they think they should invest in, instead of just focusing on the numbers and whether the math works and is sustainable.
Yeah, absolutely.
And I'm sorry if that hurts anyone's feelings, but
Yeah. And so when you're buying rental properties, you really just need to take the emotions out of it and just focus on the mathematics of it. It's the discussion, I've been having a lot recently is around the Edmonton townhouses. A lot of people heard about our podcast about the Edmonton townhouses. I talked about Edmonton townhouses last night at my fireside chat.
talked about it on the show yesterday as well.
Talked about it. Yeah, we talked about it a lot. And a lot of people are like, yeah, it's not exactly how I envisioned being this, multi-million-dollar real estate investor, right, buying these types of properties. I kind of wanted it to look like this. And I'm just like, you kind of want it to look like that because that's how you feel. You're focusing way too much on the emotions of this and not focusing on the business of this. Okay? There are people out there that own businesses where their business is that they own 10 trucks that go into festivals that suck shit out of porta potties. And they are very successful at it. Now, the people doing the sucking are the employees, and it's not the most glorious thing in the world. But the owners of the business are the ones that they don't focus on how glorious or how the lack of glory there is in that business. They just focus on the fact that this is a profitable business.
Yeah.
Okay, and you need to think about it like that when you're thinking about real estate investing. It's not about the types of properties that you want. I get it. You want to own a luxurious fucking loft out in Canmore, and and then I can use it when nobody else is using it. And that's the way. Oh, I want to own a glamping location where I can have all these beautiful glamping things, and then people can underneath the stars. So cool. Sounds
so cool.
great.
It is cool.
It is cool, but you're focusing on your emotions and not the numbers. I'm sorry.
Yeah.
Right? You got to think about the numbers. You got to think about, is there potential for this business to grow, the asset to grow, the land to grow in value, right? And it has to be backed by stats and math, not just, I think it'll go up, right? And then the business day to day has to make money. It has to be profitable. There has to be enough. There needs to be more money coming in every month than money coming out, so it's sustainable, right? And what most people realize as they start to get more and more educated is that most of the fun, exciting, and sexy, things that they thought they were going to be investing in are not that profitable.
Yeah.
And the things that aren't that sexy and the people that they're going to be working with aren't exactly the people that they thought they were going to. And it might be a little less appealing. But you have to take the emotions out of it. You have to just think about it like a business, okay? Not every deal is going to be luxurious. It's not going to be the most appealing. It might not even be something that you want to share with people. I've bought so many properties. And I think about it. I'm just like, okay, Wayne, what would you teach somebody else in this moment? And what I would teach somebody else and coach somebody else in this moment is take a picture, share it with your friends and family. Maybe they could see it and they could be like, oh, wow. I had no idea that Wayne was buying rental properties. Maybe I should reach out to him. Maybe I can invest in one of these properties, right? And that's normally what I would coach someone. But I'm standing here in this property and I'm just like, if I took a picture of this right now, it would be the most boring, most unappealing piece of marketing content I've ever produced. And nobody is going to want to invest in this. But for me, I'm looking at it from the lens of like a business. I'm like, this is the most profitable deal that I bought this year. No one in Edmonton or in Canada is beating these fucking numbers right now. I am dominating this real estate investing space. I mean, I know investments better, Canadian real estate investments better than anybody else in Canada. That's not cockiness. That is confidence. I know because I back it up by numbers. I've seen everybody else's deals. I know this. But from a marketing perspective, this is the most unappealing thing ever. And nobody would look at this and be like, oh my God, I want to
do that.
I want to do that. No. But if I said, case in point, when I talked about my commercial property that we're closing on next month, and I said that it was this big deal, millions of dollars and everything else, the amount of people that reached out to me wanting to invest in that deal, and they didn't even know fucking jack shit about the numbers. Instantly. It was so much easier. So, and that's case in point and proof that most people, they really focus on the emotions of it. They want bigger, they want flashy, they want exciting, but they're not willing to focus on just the numbers. So if you're a new real estate investor, you have to just get rid of all of that and just say, hey, I need to buy a property that's a high potential for growth, value growth, in a great sustainable market with a consistent flow of clients, and it has to have good cash flow. And the opportunities that present themselves and spit up, they might not be spit out. Sorry,
baby spitting up. I had a mental picture there. Go ahead, continue.
It might not be what you were hoping for. It might not be what you had envisioned, but do not let that discourage you. Mm-hmm. This is what this business is. And if you want to be successful, if you're getting into this to make money and to make money safely, that's what it's all about. And just get over it, right? So and that's why it's like you'll walk past someone in the mall and you'd have no idea, right? But that person could be sitting on 10 properties that just made a 50% ROI on their investment last year. Right?
Yeah.
I just talked about a property, that we're refinancing that's made like 180% ROI in 3 years, which that work out to be like 60% ROI per year.
Yep.
A basic, boring fucking property that if I took a picture of it, you'd be like, right? So just focus on the numbers. That's the most important thing. That's what average people, average real estate investors are doing right now, and they're getting those great returns. Yeah. Another thing that they're really, really focusing on, and speaking of, on the finances side of it, is that what they're not doing is they're not buying these properties all cash. Okay. What they're doing is that they're leveraging bank money. This is a huge light bulb moment for brand new investors. So I really want to just take a minute.
I remember the moment that this clicked for me.
Walk me through it.
Yeah. Well, I might not be the best at really like explaining it, but the moment that it clicked for me, like I remember it clearly because it was probably one of the biggest light bulb moments for me in investing. That and understanding when people were talking about second mortgages. Anyways, I don't want to get off track, but those were like two moments here. But understanding that when you invest in real estate, you can literally buy an asset with only a small portion of your own money, and the bank will come in with you and say, "Here, I'll buy it. I'll buy it for you. Just give me a little bit of money and I'll buy it for you." And then you can get all of the upside of owning that property.
Yeah.
Versus anything else that you invest in, that I can think of at least, you need to have 100% of the money in order to purchase it.
Yeah.
To own it.
Yeah.
Most times it's not even a physical asset. It's just a digital imprint.
I think that once we get through this, so this would be something that we would normally focus on in the fundamentals stage of our coaching. And once people kind of get through this and they understand it, because the first question is, well, why would I borrow money? Why would I borrow money? I'm going to have to pay it back. And what happens if this doesn't work? There's a lot of what ifs and a lot of misunderstandings and misconceptions of how it all works.
Just not understanding. Yeah.
Sorry?
Just not understanding.
Yeah, and then once you understand the fundamentals of real estate investing and how it all works and all the different systems that put in place that bring this all together, then you're like, oh yeah, why would I use my own money? Why wouldn't I use the bank's money? And the big thing that people need to understand is that when you borrow money, to help purchase a property. So let's say, for example, you want to buy an asset, a $500,000 asset. Normally, you would have to invest in that asset. You would have to give $500,000 to close the transaction. But what real estate investing, which is very unique, allows you to do is it allows you to only have to put 20%, and then the bank will bring the other 80%. So you only have to bring 100. The bank will bring 400. Now you do need to pay interest on that, which is a small amount. But the interesting thing is that your tenant, because you're not just, if you just bought this as a property, just sat on it, then yeah, that'd be a terrible investment because you'd be literally paying those interest payments, mortgage payments every single month out of your own pocket. But we're not just buying an asset and we're not just buying an asset and just sitting on it. We're buying an asset and operating a business out of it. So yes, we are waiting for this property to go up in value, right? And there is a cost in order to borrow the funds to be able to close that transaction. But the rent that we're getting from our business, the rental property business, the rent that's coming in is covering those payments. It's covering those interest costs. It's also covering the property tax costs. It's covering the insurance to insure the property from anything that could happen. And then if there's any other fees as well, the repairs, the maintenance.
Your tenant is paying for it all.
They pay for all of it.
They're purchasing the property for you.
So that you now it's like, okay, well, I originally was going to buy this and borrow the money for it and pay the money out of my pocket every month in order to keep it going. I hope to God it goes up in value. Mm-hmm. But now what you have is you have someone doing that for you, and basically just now it's a wash, right? So if the tenant is paying for all the expenses, now you get the benefit just sitting back and waiting for it to go up in value. But that's not the only part of real estate investing here. That's not the only profit. It's not just a one-dimensional hoping that the value goes up. That would be stock investing. You buy something, you just pray to God I hope it goes up, right? Very one-dimensional. But with real estate investing, you're not just getting that. Well, hopefully, every month that tenant's paying rent, hopefully there's more rent than there is expenses. Mm-hmm. Right? Hopefully the expenses totals, say, $1,500, but the rent that you have coming in is $2,000. Well, that's what we call cash flow. And cash flow is an additional form of profit. That cash flow can be used either as profit, or it can go into, a bank account to be held in a reserve for any potential repairs or vacancies or maintenance for the property. But in a lot of cases, you don't need that much cash flow. As long as you buy a property that has good amount of cash flow, you don't need all of it. So some of it will go to profit and some of it will go towards the repairs and maintenance and vacancy, right?
Yeah.
So there's another form of profit right there. So if you buy properties that have good cash flow, that's additional profits. There is one last section there where it profits that we didn't talk about. And that's because every month that we pay our mortgage payment, it's not just going all towards interest. I said that you borrow money, you pay interest on it. You're not paying interest-only payments on your mortgage payment. It's principal plus interest. So every payment that you make, a portion of it goes towards the interest, which is what the bank is charging for lending out the money. But the other portion is towards the principal, which is paying down the balance of the loan. And so every month you get the rent and you make the mortgage payment, and the mortgage payment goes towards, goes towards the interest. The remaining balance of that goes towards the principal. It's paying down the loan. And so if you have an asset that's worth $500 and you have a mortgage that started at $400, and every month you make a payment, that $400,000 mortgage is going down. This margin right here it's called equity.
And it's growing.
So if you had a $500,000 house with a $400,000 mortgage and then you sold it, you would get the $100,000 back out, right? You put $100,000 in, it sits there. And if you sold it, then you get the $100,000 back, right? However, if every month it's slowly going down a little bit, that equity that you have is growing, and that is profit as well. It's called mortgage paydown. You understand? So there's 3 different ways to profit in this business. So if you buy the right properties that have a high potential for growth, that have a very good ratio between the rent and the expenses, and it will operate as a good business, then you're also going to be profitable in the cash flow and the mortgage paydown as well. Right?
And just going back to that for 1 second, keep in mind the tenant who is paying rent is paying that bank interest amount, and they're paying down the principal mortgage, building your equity.
Yeah.
So the tenant is covering all of that. Nothing's coming out of your pocket if you're buying for cash flow, if you're buying where your rent is going to cover all of these things plus, none of that is being grown or built from your pocket. It's from your tenants.
So a little exercise that I want you guys to do today, if you haven't done this before, what I'd like you to do is I'd like you to take a $500,000 property in your market, and let's say it's got $3,000 worth of rent. or $3,500 worth of rent. I want you to run the numbers. And I think most of you guys can do this. If you got your grade 10, you can do this, okay? So if you're 16 years old, or if you didn't get past grade 10,
You're fine.
you're fine. You can do this math. What I want you to do is I want you to compare buying this property all cash for $500,000, and then include if you're buying it all cash, include the property taxes, include the insurance, include the whatever other expenses that you want to add in there, okay? And then see how profitable it is with that $3,500 worth of rent, okay? And add a 2% appreciation per year. So the value of the property goes up 2% per year. And look at it over a 20-year period. Then what I want you to do is do option 2 or option B, or which is you buy it, but you only put $100,000 into it. You get the bank's money of $400,000, and you borrow it at 4.5% interest rate, and see what the mortgage payment would be. Then I want you to see how profitable it'd be if you did it that way. Now, I don't want you to take my word for this, but I'm going to give you the answer. It's actually more profitable on the second option, where you borrow the money. And this is like, people, how is that possible? Why would I pay the bank every month when I could just...
But I could cash flow like $3,000 a month, probably more.
Well, yeah, your cash flow might be higher, but it's 6.5 dozen if you think about it. Because when you buy it with a mortgage, you're getting the profits in. It doesn't go towards cash flow; it goes towards paying down the mortgage. So it's almost equal. It's not exactly equal because it's a semi-compounded loan. But what you'll find is that it's either cash flow or mortgage pay down. But it ends up working out to be pretty much the same. But the big key, so if it's exactly the same, meaning that if you paid all cash for it, you would get the cash flow every month in your hand, compared to if you got a mortgage, it would go into the mortgage paying down into equity. Most people would be like, well, yeah, I'd like the cash flow though. And that's cool. From a cash flow perspective, it does make more sense. However, the key difference is the fact that in one example, you only had to put $100,000 into the investment. The second example, you had to put $500,000.
So...
Which means that your return on investment is 5 times better. 5 times better.
And if you had $500,000 instead of just buying...
Well, let me just finish my point, because that's a very good
Okay.
segue into that. And to be honest with you, we have other things we need to talk about here, which is not even on this point that we're trying to make right now. But this is a huge fucking light bulb moment for people in leverage. Mm-hmm. Where I'd like to save that for another day. If let's say, for example, you're going to make $50,000 worth of profit. Do you want, if that's what this property can make, meaning that like the rent that it's going to bring in, or whatever like it works out to be, let's say, 3,500 times 12, we're getting close to 50,000. Let's say the total profit for the year is $50,000. Do you want to make $50,000 on a $500,000 investment, or $50,000 on a $100,000 investment? It's a bad example, the way that I put it. It didn't really make as much sense. But the point is that what you want is you want to put less money in for the same amount of profit, right? So yes, your cash flow is higher if cash flow is important to you. The cash flow will be higher, but you're going to have to put more money in, and your return on investment is going to be terrible. And I think the whole purpose of this is to take a certain amount of money and get the best possible return. So leverage is a huge game changer, an absolute huge game changer. And as Gabby said, if you had $500,000 to spend, why would you put it on one property? Why wouldn't you buy 5 properties instead? And then get all the benefits of it. Because the key thing here, another key thing to note before I move on, we're getting towards the end of the show, and I have so much more I want to talk about, is that you get to buy a property. You only have to bring 20% of the money to close on it. The bank brings the other 80%, but you get to benefit from 100% of the proceeds and the gains. You only have to bring 100,000. You only have to bring 20%, but you get to benefit from 100% of the gains. The bank doesn't share in that. All they ask for is a small little interest rate, a charge of interest on it, just to borrow the money. And as long as the deal is profitable with that added in cost of borrowing it, you're off to the races. That's a very important thing to understand, is that if the cost of that money exceeds the value of the deal, then don't do it. You do have to take that into account. It is an expense. But hey, the interest that you pay on that mortgage is actually tax deductible.
Ooh, ooh.
I could keep going. I could keep going for days. I could keep going for days. One of these days, I want someone, and there's been a couple people in my comments sections recently being like, stock investing gets better returns. And I'm just like, motherfucker, you just go book the venue. You get 500 people in the room, get 2 fucking podiums, and we can go and debate about this. But don't come slide into my DMs trying to fucking talk shit, trying to tell me you're right. You give me an opportunity, you give me an hour in front of 500 people, I will fucking obliterate you. Oh my God, obliterate. No one can win in this debate. Mathematically, nothing compares to real estate investing. Nothing. Yes, you can get higher returns, but can you do it as safely as this? No, not a chance. Anyways, fucking gamblers. Okay, so another thing that really just, this was not the direction that I wanted to go for today's podcast, but you just see I get so fucking fired up. I get fired up on this stuff. Last night was fun. Another thing that successful average real estate investors do is they hold the property for a long time.
Yeah.
Because they realize and they understand that money is not made in the short term.
Yeah.
If you're into this for 2 or 3 years and like, I don't really like where the market's going, I think I'm just going to sell it. Terrible idea.
Yeah.
Terrible. That is an absolute guaranteed way to lose money.
Yeah.
You have to buy this property with the intention to hold it for 15 to 20 years. I just had this conversation with one of our joint venture partners recently, and I explained to them why we're holding it for a long time, or why I am saying to you that we are holding it for a long time. If in the event that there's a great opportunity to sell it in 7 years, and I see a very unique opportunity to capitalize on an opportunity in the market, yeah, we will. But let's just plan to set it and forget it for 15 to 20 years.
Mm-hmm.
And just have it in our minds for that. And then we will look for that opportunity if it presents itself, and we'll take it. But otherwise, real estate wealth is made in the long term.
Yeah.
Okay. You need time to pay down the mortgage. You need time to build up that cash flow. You also need time to realize the appreciation.
Mm-hmm.
Real estate wealth or real estate values don't go like this. They go like this.
Sorry for
Not
anybody
all.
who's listening to the audio only.
Yeah, you got to watch the video.
There was a display, yeah.
and it depends on the market. Some markets are a little bit more, stable,
Yeah.
but other markets are just all over the fucking place.
Yeah.
And so, but it doesn't matter. What matters is that, if you're looking at a graph and you see this, all these different.
Kristen says like a fish, like a floppy fish.
Yeah, it was like I was flopping around. I was flopping around like a fish. What you'll see on this graph is all those marks of all the different prices and the values are going up and going down. But what you look at is that they'll take the average line that goes straight through it.
Yeah.
And it's where it started and where it ended is the most important part.
Yeah.
Right? So I don't give a shit if the values in my portfolio drops 20% tomorrow.
Mm-hmm.
Doesn't affect me at all because
Yeah.
my business that I'm operating in it is still operating profitably. I'm still making the payments every month. So if it drops by 10%, which never happens ever, but if it did, yeah. I'm fine because my rental property business is still paying the payments every single month. I'm still paying the mortgage payment, still paying the property taxes, still paying the insurance. I don't give a shit.
Tenant's
it
still
only
there.
matters. The value only matters when I go to sell.
Mm-hmm.
But I am still profitable because the tenants are paying the payments every month. You have to hold it for the long term.
Yeah.
And here's the last thing that average real estate investors are doing, average people are doing every day that are contributing to their success in real estate investing is that they are repeating the process.
Mm-hmm. Yeah, I think that a lot of people assume that people just go in and buy all the properties, like overnight. But what these people are doing is over time, they are continuously adding to their portfolio as time permits, as resources permit, as markets shift, they're shifting. And it's something that happens over time.
Yep. That's it. It's just slow and steady. Slow and steady. And you don't need to overdo this. You don't need to. So many people are just like, I want to scale up. I'm like, calm the fuck down and just keep doing what works.
Yeah.
Right? Yeah, I mean, if you've got a bunch of extra cash sitting around and you see more value in buying bigger and buying in bulk or something along those lines and the numbers make sense, yeah, sure. But slow and steady wins the race. And I don't know how many times I need to say this or how many more people need to go busto before the whole fucking world figures it out. Slow and steady wins the race, right? Trust the process. Take it easy. Invest for the long term. Don't fall prey to these stupid fucking gimmicks and these get rich quick, fast schemes and all these other things. Just find something that works, that's consistent, that's safe and reliable, and do that over and over and over and over again. And just keep picking away at it. And maybe that means you buy one property every couple years or one property every year. Maybe that means in a few years, maybe you just buy two because that's all you have the money for, but you wait till the 5-year mortgage term is up and then you go and refinance them, you buy two more. There's nothing wrong with that. Mm-hmm. Slow and steady. If you don't want to raise money and you don't want to do big deals and others, like, because that's not you, then don't do it, right? Yeah. There's no pressure to keep up with what everybody else is doing. Oh, God, you do you. Mm-hmm. You do what's right for you and your goals and for your family, right? And figure it out. Build a system, trust the process, set it, forget it, and then, like I say every day, focus on the things that are most important.
All you got to do is try.
The things that are most important to you are your family and the people that you care most about, and you and your mental health and your physical health, right? That's it. That's all. This doesn't have to be complicated. The properties that we buy, I said, most of them I cringe at the thought of taking a picture because I'm like, no one is going to find this entertaining. And no one's going to be like, oh my God, that's so cool, right? They're not going to. But that shit has literally got us to where we are today.
Yeah.
That simple, boring, vanilla investing has got us to where we are today. And it was such a fucking pain last night trying to do a presentation talking about that boring shit. When I was watching, I'd say half the room was completely unimpressed. There's like, when's he going to talk about seller financing? When's he going to tell me how to buy properties with zero money down? When's he going to talk about highest and best use? When's he going to talk about infill? Some people are just like, it has to be flashy for them. But I'm telling you, the reason why we've been around for as long as we have and we're in the position that we are right now, being able to reinvest all these funds and help so many people, is because it fucking works. It works. So if that's you, if this message has been received and it resonates with you, then you have arrived at the right location. You have arrived at the right venue. This is your space. And we will continue to keep focusing on tried and true, reliable information on how to invest safely with the best and highest returns with the least amount of work. This is your place. This is your space. And we're your people and you're my people, right? So stay tuned. Keep tuning in. If we can continue to keep helping you, we would love to. We provide free coaching every weekday morning. I donate and dedicate 1 hour. We donate an hour of our time every morning at 7 a.m. live. In most cases, a lot of these episodes are not scripted. They're not prepped. There's no topics. Sometimes we have to come up with something because we got to talk about something. But for the most part, these episodes are not scripted. There's no agenda. We go off of what you guys need help with. We go off of the emails that you guys send in, the questions that you guys put in the chat, right? And we make an episode out of that. But the goal here is that this donated hour is for you guys. It's a free coaching call for you. So take full advantage of it. If there's things that we can help you with, if there's questions that you have, if there's something that you're struggling with, put it in the chat. Join us on YouTube at 7 a.m. Just look me up. It's Wayne Hillier on YouTube. Or listen to the Canadian Real Estate Investing Morning Show on iTunes and Spotify, whichever else. Mm-hmm. Or if you can't make it live, then you can email us, info@reimorningshow.com. Sending your questions, we'll answer them for you. Anything we can do, we'll do it for free coaching. Anything we can do to help you take that first step or that second and third step in order to building the life that you want to live, right? Because anybody, like I said in the beginning of the show, anybody can do this. There is nothing special about what is happening, or there's nothing special about the people that this is happening to, and who are doing this. Like it's
everyday people.
Everyday people. I wish I could humble myself more. I humble myself enough every morning, and I'm telling the stories about who I was and what I did and things like that. I hope that I'm showing enough transparency to show that Everyday people are doing this every fucking day, but they're getting extraordinary results. And it's creating a tremendous life for them where they're building millions of dollars worth of wealth. So I want you to realize that anybody can do this. All you got to do is just take that first step. And we're here in order to grab your hand for it, like a nice gentleman, as you take that first step. So we look forward to seeing you guys here tomorrow. We got a really special guest joining us, Edmonton investor-focused realtor Calvin Hexter from Calvin Realty is on the show. He's going to be talking about the Edmonton real estate market.
Super excited for that.
And I guess we'll see you guys there. Have a great day, guys.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.